Tech stocks are under pressure. NASDAQ leading the major averages to the downside today. It comes as investor demand grows for return on big tech's big AI spending. Joining me now, Post 9, FirstMark's Rick Heitzmann. Welcome back.
Hey, Scott.
Where are we kind of on the hope curve versus return on investment?
So that's kind of what we've talked about for the last 2 years, right? Eventually, the return has to live up to the investment. And so chickens are coming home to roost in the second half of this year. And so far, there's been probably very little return on investment. Some of the simpler models, some of the guys who are doing data enablement, we've talked about Data IQ in the past, are showing a real return on investment. But for a full cycle, we're still early in the process, and especially in the private companies, there's still a lot, people are betting a lot on the come.
You say at some point, you can't spend against hope forever. I mean, where's the breaking point?
Well, it depends. If you're
so early, I mean, you're
in the first or second inning. So people are thinking, how long do you spend? If you're a hyperscaler, you're Microsoft, Google, Amazon, your turn threshold is so long. You're playing the game of, can I outspend people? Can I outlast people who won't be able to get from here to there, and therefore I'll have a competitive advantage? Because there's a general belief that AI is maybe not, it's not if it's going to happen, it's just a matter of when. So if it's a matter of when, how long could people hold on?
Do you feel like the winners are so clearly defined at this point, or is the jury still out?
The jury is clearly still out. In the first or second inning, the winners are not defined. You're seeing the early leaders, but as we've seen in all kinds of other technology, oftentimes the pioneer gets the arrows in the back, and someone learns from their business model, learns from their go-to-market, and becomes much stronger. And you saw everything from social networking to PCs.
And you think this will be no different?
This will be no different. I think OpenAI has a significant lead. They have a tremendous amount of capital. They're playing like an incumbent, so they might be able to stay ahead of it. Obviously, we've talked about Microsoft in the past, and they've invested heavily and have a substantial amount of capital, so they're staying ahead of the curve. But we're seeing things in the private markets which are very interesting that might be disruptors.
OpenAI's valuation would have one believe that the game's over. Right? I mean, $150 billion, I think, is what they're currently raising at. And, you put that against what Perplexity or some of these other generative AI companies are being valued at. And it's like the disparity is unbelievable.
Well, you're seeing some Anthropic, Perplexity valued at the billions of dollars. So the people are playing the game. If you get a certain portion of the search market and Google's worth, a couple $1 trillion, what are you going to be worth, especially if things get thrown up in the air? And, conventional wisdom is 5 years from now, we're not going to be doing conventional search. We're going to be working with a ChatGPT from whatever interface, even if it's Meta Glass, to be able to answer our questions. So that whole new version might be completely different. It might not be phone-based, and therefore there should be new winners. But prices, you're saying, are clearly priced to perfection if you're OpenAI at $150 billion.
Where are all the IPOs?
I think there's risk. There's still too much risk
in the market.
In the market, we saw a lot more risk today, and we had the first thing to unwind that risk, and we said we have to unwind a couple risks. You have to unwind the war risk, presidential election, and clearly the Fed. And the Fed, started to drop rates a couple weeks ago. They're going to drop it again. That's one thing they'll unfurl. Hopefully we'll have a peaceful transition in the presidential race, and then maybe some of the shooting wars will slow down, so there's less of a perception of risk. But in general, on days like today, when you see the NASDAQ do what it does, people are not looking to take a risk on a new whiz-bang AI company.
What are private tech companies thinking about the path of interest rates, how it impacts their business, ability to raise capital, cost of it, et cetera?
They're feeling pretty good because a lot of their, even their projects, so if you're an enterprise software company, you're coming out of the capital budget, and therefore interest rates are decreasing. People are hitting earnings, therefore they have more money to invest and deploy. So you're feeling good about fundamental demand because of lower interest rates, and they're feeling better about the IPO market, but there's still a lot of risk. And what some folks thought was a fourth quarter opening of the IPO market is now looking like second quarter 25.
Oh, second of 25.